let's come to you first, Douglas. I mean, you're not overly worried about what's happening, are you, in China?
I think you have to make a distinction. I think we start the year basically where global positioning is as polar as it's been since the global financial crisis. So volatility is obviously going to be very high. People are highly sensitive following a 2015 that was very, very difficult. As it happens right now, one of the key risk indicators globally has been attributed to the RMB right now. So caveat our comfort with what's going on in China with the fact that the reality of markets is that this is what the market's focusing on right now. Having said that, what the market is concerned about is whether the RMB is telling us that there's going to be a one-time further devaluation which will lead to a currency war across the region. We think the likelihood of that is very low at the moment.
I mean, I think this is the critical thing. Given the volatility that it sparked on a global basis, this setting 8 days in a row where they reduced where they wanted to see the yuan rate, this level of volatility, they couldn't... Well, sorry, I'm speaking my own personal opinion here. Would they really risk that kind of global repercussion by another one-off event?
I think not, and that's thing, and I think we have to break it down to strategically what the likelihood is of what's happening at the moment. The RMB moves have actually been moved by the offshore market rather than the setting. That's the first point to make. So actually it's outflows rather than anything else. Strategically, is Chinese growth decreasing enough for them to warrant further RMB depreciation? Actually, in the short term, growth is stabilising. That's the first point to make. In an export sense, the export market's actually looking okay in China, contrary to popular opinion. That's despite the fact the RMB has had a 30% relative appreciation versus other Asian export markets. They're still winning market share versus their Asian peers in high-value manufacture. And in the commodities market, we're not seeing any stress in the credit markets to suggest that actually they need to support commodity exports either. So strategically, there's no need for them to devalue the RMB any further, and it just comes down to outflows. And we can talk about that.
I mean, I understand what you're saying, Douglas, and then later on I know I'm going to speak to a guest who says, oh, they're going for a 10% devaluation. There's another view out there. Richard, what is driving the Chinese currency at the moment? Is it the fixings and the markets watching what the regulator does every day, or the government does, the PBOC does, rather, with the fixing every day? Or is it, as Douglas says, it's actually in the offshore market and it's the outflows of capital that are in the driving seat here?
I expect it's a bit of both, actually, Anna, and I think if you look at what's going on in China from a global macro perspective, so I focus more on the Western European and North American markets, but just to see the sort of spillover, we've had one episode in August, we've had a second episode now. Wouldn't surprise me if we calm down a little bit for a while, and then we perhaps get another episode in late spring, early summer. And it's sort of an iterative, ongoing process with the Chinese. And it's also, I think, the weakening of the currency is part of a broader monetary policy easing, and that by doing that, perhaps they look to ease conditions a little bit.
Well, certainly, I suppose the Aussies and the New Zealanders will probably be quite happy if they draw a line under this at this stage. I mean, the worst start to trading for the Aussie dollar since it went free float back in the 80s. You're looking at money flowing into the yen at a fairly vicious rate in terms of what's going on. Douglas, when we look at these markets, China's actions have repercussions for every central bank.
Hugely.
SMB anniversaries next week. They got torched last year. The Danes got shoved last year, but they held up. They're strong, the Danes. But the ECB and the Japanese are in this mini battle as well.
It's terrible. I think actually the key risk for any moves in the RMB, and I think actually it doesn't matter as much as people think it does from a Chinese perspective. They've got a lot of other levers to pull in terms of loosening, big levers rather than the currency, and the currency makes very little difference at the moment. But the key risks are for the likes, you mentioned the yen. I think that it's terrible. The Japanese are in a position where actually they're running out of options to further stimulate. A further strengthening of the yen is bad for them, and actually you look at the potential both competitive positioning of a further RMB devaluation, and Japan's looking terrible.
But the market has virtually wiped out what Kuroda did, hasn't it? That was the story the other day on the terminal.
And they're coming to a situation where actually they've not got a lot more that they can do on that. So I think, you know, we're actually seeing huge risks in Japan right now from what's going on. And in particular, just one last point on that, when you look at currency outflows with the FX reserves that China has, they've been selling US dollar assets basically in order to keep or to mitigate the impact of the currency thing. But if they start to move and sell euro, which is the next largest holding that they have in FX reserves, and it's a big divergence between the euro and the Japanese yen, the implications for a further euro weakening versus not that happening for the yen is even worse for Japan.
It's filling me with dread.
It's, yeah, Japan is... I'm very nervous about Japan, very nervous.
George Osborne sounded pretty nervous about the UK economy yesterday, despite singing its achievements as well, Richard. I mean, what did we learn yesterday on the pound? Because it seemed to get caught up in a lot of market volatility.
Well, I think what's going on with sterling right now is that we've seen a really big shift in UK yields lower this year, so far this year, and I think that is playing into the currency, because we've been on and off between the late 16, early 17 liftoff for the Bank of England. That's now firmly a 2017 story. And the reason is we've seen a lot of flows into the UK's gilts as a haven, and it's filtered into the short end pricing. And so the pound is very much suffering, I think, this week from a shift in interest rate differentials.